If you're trying to keep up with modern finance, wow, you're just swimming in acronyms, aren't you? DeFi, DEX, governance tokens, derivatives. It's a lot. But today, we're going to cut through that noise. We're focusing on one specific asset, Aster coin, because it represents this really interesting crossover point. Our mission here is pretty straightforward. We've got your sources packed with all the technical stuff and future predictions. We want to break down Aster coin and the exchange behind it, Aster DEX, nice and simple. Give you that quick, solid understanding, the basics, the cool features, the risks, and what people think might happen with its price. So you're basically up to speed right away.
Yeah, absolutely. So Aster, fundamentally, it's the native token for Aster DEX. It's what makes the exchange actually work.
Okay, let's unpack this then. A decentralized exchange, you said.
Yeah.
High stakes, complex. Sounds like Aster DEX is, well, more than just your average crypto swapping site. What is it, really?
Right, it's engineered differently. Think of it less like Coinbase or Binance and more like a decentralized stock market, but for synthetic assets. The crucial bit is no middlemen, no banks, no brokers. It's just you trading peer-to-peer, and it's all secured by code on the blockchain. And this didn't just pop up overnight. Aster was, well, essentially born in 2025. It came from a merger, quite a strategic one, between two existing projects, Astherus and APX Finance. It wasn't just slapping on a new name. They actually combined their liquidity pools, their tech, really built something stronger together.
Gotcha. So if the DEX is the marketplace, Aster token is kind of the engine oil. It makes everything run, the trades, the voting, paying out rewards.
Exactly. It's the fuel.
Yeah.
Especially when you consider its multi-chain design. That's key.
Multi-chain, why is that so important here?
Well, for fast trading, you need to move assets between different blockchains quickly and, cheaply. Aster helps make those cross-network swaps happen smoothly. It makes things like arbitrage or just managing your positions way easier no matter which chain you started on.
Okay, fast, decentralized, multi-chain market. So what are people actually trading on there? You mentioned synthetic assets.
Precisely. I mean, yes, they offer basic spot trades, just buying and selling crypto directly. But the real headline grabber is the advanced stuff, specifically perpetuals.
Perpetuals. Sounds fancy.
They are, kind of. They're basically contracts, derivatives, that let you bet on where the price of something is going without actually owning it. And unlike traditional futures, they don't expire, so you can keep speculating. And on Aster, this isn't just for crypto. Critically, it applies to stock derivatives too.
Okay, here's where it gets really interesting, I think. This is where Aster seems to be doing something pretty different from most other DXs. They've actually managed to connect decentralized finance with, well, real-world assets. So you're not just stuck trading Bitcoin or ETH. You can get exposure to stock derivatives contracts that track big names like, I don't know, Apple, Tesla, Amazon, all within that DeFi setup.
That's exactly it. And crucially, accessing this is paired with some really extreme risk and reward potential. Our sources point to one feature that's, well, it's aggressive even by crypto standards. You can use up to 1001x leverage on trades.
Whoa, hold on. Did you say 1001x? 1001x leverage? That sounds almost unbelievable. For someone listening who knows crypto but maybe hasn't messed with that kind of leverage, what does that actually mean?
It means you're controlling a massive position with very, very little capital. Put in $1,000 and you're effectively controlling a position worth over $1 million.
The flip side, a tiny price movement against you, like just 0.1%, can wipe out your entire stake. It's purely for high-frequency, high-risk traders. Speed and precision are everything.
Okay, that just screams risk management questions. How does a decentralized exchange run by smart contracts, not a central company, handle things like margin calls and liquidations when you've got real-world assets amplified 2,001 times? Yeah, that's the big technical hurdle Aster set out to clear. The system leans heavily on a really fast, complex oracle structure. These oracles feed real-time price data for both crypto and the stock derivatives straight into the smart contracts. If a position goes bad, hits that liquidation point, the contract automatically liquidates it, sells the collateral instantly. It has to be lightning fast to handle that at 1001x leverage. That's why that merger focusing on performance was so vital.
Wow, the tech behind that must be seriously sophisticated. Okay, let's switch gears slightly. How do people actually get access? If you're dealing with leveraged stock derivatives, how does it avoid all the usual know your customer KYC rules?
The decentralization paradox, right? Because it's non-custodial, the exchange never actually holds your funds. You trade directly from your own wallet. It kind of sidesteps the regulations built for centralized companies. So the easy version for access is basically connect a crypto wallet, something like MetaMask, to their website. That's it. No sign-up forms, no usernames, no sending in your passport. You're trading pseudo-anonymously, all run by automated code.
Just connect a wallet, and boom, you can potentially trade Apple stock with 1001x leverage. That sounds like, from a regulatory angle, a ticking time bomb almost, connecting regulated assets to anonymous DeFi.
It absolutely pushes boundaries, no question.
Mhm.
For now, it exists in this sort of gray area because the assets are tokenized derivatives and the whole thing runs on decentralized code.
Mm-hmm.
The platform basically puts the onus on the user to understand the risks, which, as we've said, are extreme.
Yeah, definitely a steep learning curve with the complexity and the risk, though your sources did mention the team's trying to help there, making tutorials and guides more available.
That's right. They seem aware of the barrier to entry and are putting resources online to try and smooth that out a bit for newcomers.
Okay, let's pivot then. Beyond the crazy high leverage trading, why would an average crypto person want to hold the Aster token itself? What are the perks? It can't just be for trading, right?
No, it definitely has utility beyond that. It mainly falls into three areas. Enabling that power trading we talked about, letting you earn passive income through rewards, and, very importantly, giving you governance power.
Right, let's start with the rewards. For people not chasing that 1001x adrenaline rush, Aster is key for providing liquidity.
Exactly. You can lend your crypto assets to the trading pools on the DEX. This provides the liquidity needed for others to make those fast trades. And in return for lending your assets, you get rewarded with Aster tokens. Plus, you get a cut of the trading fees generated by that pool.
People often describe that as like getting interest on your savings, but I feel like that comparison can be a bit tricky in DeFi.
It really can be misleading, yeah. We need to be clear here. While you are earning a yield, it's absolutely not the same as a risk-free savings account. Because you're pooling volatile crypto assets, you face this specific risk called impermanent loss.
Which is, remind us.
Impermanent loss happens if the price ratio of the two tokens you put into the pool changes significantly after you deposit them. When you go to withdraw, the total value of your withdrawn tokens might actually be less than if you just held on to them separately in your wallet. That potential loss is the risk you take, the trade-off for earning those Aster rewards and fees.
Okay, that's a really important clarification. And then there's yield farming and automation, too, for the more hands-off types.
Right. Aster also plays a role in more advanced strategies. People set up trading bots or complex automated systems to maximize returns across different pools. It definitely appeals to that passive income crowd.
And you mentioned governance. That sounds pretty key.
It really is. This is where holding Aster makes you a stakeholder. It gives you actual voting power on important decisions about the platform's future, like community democracy for crypto.
And these aren't just small decisions, right?
No, not at all. Holders might vote on big things, like whether to integrate support for a new blockchain, or maybe change the fee structure on the exchange, or approve listing a derivative for a totally new stock. How many tokens you hold directly impacts how much say you have in how the DX evolves.
Okay, and if we connect this to the bigger picture, you mentioned earlier the multi-chain aspect. That, plus Aster making swaps easy, must be great for arbitrage, too.
Oh, absolutely.
Yeah.
Arbitrage, making money off tiny price differences across different places, needs super fast execution and low friction for moving funds.
Right.
Because Aster enables that smooth, quick cross-chain stuff, a trader can spot, say, a tiny difference in a Bitcoin perpetual price on Aster versus another DEX and jump on it almost instantly. The token helps make the whole system hyper-efficient for those kinds of plays.
That gives us a really solid picture now. The structure, the unique features, the utility. It sounds strong, but, people listening will want to know, is this just cool tech, or is the market seeing this potential? Let's get into the financial outlook, the price predictions, and we always have to start this part with a disclaimer. Crypto prices are volatile, things change fast. But okay, as of right now, November 2025, Aster is trading around the $1 mark. It's done okay since the merger launch, but it's still definitely tied to how the whole DeFi market is feeling.
Yeah, exactly. And when you look at what the experts are saying, synthesizing the outlook from your sources, the general feeling is pretty bullish. And it's not just random hype. It seems, based on what the platform actually offers, that unique mix of high-leveraged stock derivatives on a multi-chain DX, plus the fact that its user base seems to be growing steadily.
Okay, let's throw out some numbers then, keeping in mind these are just projections. For the end of this year, 2025, the average prediction seems to land somewhere around $1.50.
Right, but there's a range there. The sort of cautious low-end estimate for year-end is about $80.95. That probably reflects what might happen if the broader crypto market takes a breather. But on the high end, some are looking at potentially hitting $3.07. Much more optimistic.
And we have some specific firms putting numbers out.
We do. Coinbase, for example, they're projecting around $1.46 by December, but they specifically tie that to the current DeFi bull run, keeping it steam through the end of the year. And then CoinCodex is one of those sources mentioning that higher $3.07 ceiling, but that depends on the platform keeping up its growth in users and liquidity.
Okay, what about looking further out into 2026?
The positive sentiment mostly continues, mainly because people expect leverage trading in DeFi to keep booming. Digital coin price, for instance, they're forecasting an average price of about $2.60 for Aster throughout 2026. Others, like VentureBurn, are also positive, but maybe a little more conservative, predicting an average around $2.33 for 2026. But really, for all these predictions, the key driver seems to be whether Aster can successfully attract and keep those serious, high-volume derivatives traders, the ones who really want that 1001x leverage capability.
Right, that makes sense. Well, that brings us pretty much to the end of our deep dive today. We've gone through the history, the merger, the mechanics of that wild 1001x leverage, the actual uses for the Aster token, and what the analysts are projecting for its price.
Yeah, I think the main takeaway is that Aster is positioning itself as more than just another DX. It's aiming to be this powerful, high-leverage, multi-chain platform that really tries to bridge traditional assets, like stocks, with DeFi tech. It's a potent mix, but definitely comes with significant risk.
And hopefully, for you listening, you now feel properly up to speed on Aster Coin, its structure, the risks involved, why people hold it, and the financial forecasts cutting through all that jargon that usually makes this stuff confusing.
But maybe we can leave you with one final thought to chew on. This platform offers up to 1001x leverage, not just on some obscure altcoin, but on derivatives tracking major global stocks like Apple and Tesla. Real-world assets. And you access this through a decentralized interface with no KYC checks.
So the big question becomes, does giving people this kind of extreme leverage on major assets actually push DXs into the mainstream financial world faster by making access more democratic? Or does the sheer amplified risk involved, especially with non-KYC access to derivatives, mean that regulators are eventually going to have to step in and fundamentally change how platforms like this can even operate? Something to definitely ponder as you watch this space evolve.